Hey guys, welcome in this video. I hope that all of you are doing right. So in this video, what we're going to do is a market breakdown video, which means that I will share with you guys what I think of the stock market, the dollar, interest rates, inflation, and all of these things. So I'm going to give you guys as much value as I can to help you navigate through these markets. And at the end of the video, I'm also going to explain you guys a trade that I took this week that is related to these ideas. And this trade is already running in some pretty nice profit. So this is what we will take a look at together. So just before that we start, as always guys, please feel free to drop a like on the video. I would really appreciate it. Again, it just helps me grow the channel, and make sure as well that you are subscribed if it's not already done. So let's get right into it. All right, so first of all, let me put you guys a bit in context of what happened in the last couple of weeks and months, just to make sure, right, that we all start from the same place. So essentially, right, this summer we had a big rally to the upside on the stock market, reaching this trend line right here and this 200 moving average. And then what happened is that the market started to go back down on the idea that inflation was still very high and that the Fed would need to hike interest rates even more to try to help inflation go back down. Okay, so essentially that is what has been going on, and this idea here, right, has been the same for multiple months. Okay, so the idea that inflation is very high and the only way for inflation to go back down is to slow down the economy, and the only way really for the Fed right now to slow down the economy is by raising interest rates. So the central bank was raising interest rates, and they're still doing it at the time of recording this video, which means that their goal is to slow down the economy and make sure that inflation starts to go back down. And so that's the reason why we had this big down move here on the stock market. And I would even push it to the extreme of saying that this is the reason why we've been in a stock market correction since the beginning of the year, right? If we look at the date right here on the chart, we can see 2022 is literally right here. Okay, so since the beginning of the year, we've been making a correction. And the reason why, as I said, it's pretty simple. It's simply that at the end of the day, the inflation numbers were just too high, and so the Fed needed to hike interest rates to make it go back down. Okay, now what is really important to understand is that at some point the Fed is not going to hike forever. Okay, at some point the Fed will have to stop hiking because they will need to wait and see what the impact of these rate hikes will have on the markets. And what I mean is that when the central bank hike interest rate, especially as much and as fast as what they did, right, what it really means is that they will need to wait and see the impact again that this will have on the economy, right? So if we look at interest rates, right, in the US, just to put you guys a bit in context, right, let me just remove the moving averages and the indicators. There we go, right? So look at how fast this hiking cycle has been, right? If we look at the previous hiking cycle, we can see that it was a bit more slow, right? So this was very fast, very aggressive. And so what that means is that when the central bank will hike so much like that, right, the impact that it will have on the overall economy, as I said, will be overall between 6 to 12 months. Okay, and so they started to hike at the beginning of the year, pretty much, okay, more around March to be precise. So it's been a bit more than 6 months, okay, but we're still just starting to see some impact that this will have on the economy, but we don't really know how much of an impact there will actually be because of all these rate hikes. Okay, and so what that really means is that at some point the Fed will need to take a pause. They will need to wait and see what the impact will be before just hiking more and more, right? They cannot keep doing this forever unless they will really crash the whole economy, and that's not really their goal as well. Okay, and so in the last couple of weeks, what I was looking for was to see when this idea of pausing interest rates would actually start to appear on the markets, right? So as I said, in the last multiple months, right, I've been trading the idea that interest rates would keep rising, and I've been trading this idea mainly through the dollar index. Well, not the dollar index directly, but I should say the dollar in itself, right? So I've been buying the US dollar, and so I bought it at multiple points. I had a few good trades related to this idea. And so the thinking process was very simple. Again, right, inflation was too high. They needed to hike interest rates to make it go back down. So the dollar would benefit from this simply because the US central bank were hiking the fastest before, if we compare it to other central banks, essentially. Okay, and so the dollar went up and up and up and up. But as I said, at some point, right, there would be a turning moment. And I think that the turning point could already be in the making, and that is the trade that I took this week, and that is what I want to explain to you guys, right? So let me put you in context, right, of what happened around these lows right here. Now, as we can see, the low was printed right here, okay? So this was the low that we have right now on the stock market, right? And what was very interesting with this low is that it came at the same day as when we had the inflation numbers in the US that came out. So if we go back on the economic calendar and I show you guys, right, when this happened. So we can see that 2 weeks ago, right, so October 13, we had the US CPI data, and we can see that inflation was very, very strong. And so as you can see, this came literally on the 13th of October, right? So literally the same day. And so what happened, right, is that initially when the inflation numbers came out, the markets went down quite a lot, okay? So this was right here, the initial reaction, okay, of the market when these numbers came out. And the reason why is fairly simple. Inflation numbers, as you guys can see, were very strong, okay? So this was stronger than expected. Same thing for this and same thing for this. And so what that means is that inflation was still very strong. And so the market was still pricing in the idea that the Fed would need to hike even more interest rates, okay? But what happened, and this is what I found really interesting, is that the market went down quite a lot. And this was a perfectly normal reaction. But then it completely reversed, right, on the same day, as you guys can see. And then after that, it started to go back into a short-term uptrend. And when I saw that, I started to ask myself the question, well, why is the market making a low and completely reversing on such a strong fundamental idea? And so one of the main things that was going through my mind at that point was that when we have a very negative news for the market, because even if the inflation numbers were strong, it's negative for the stock market, right? So just to make sure. So when we have a very negative news for the market, but the market is not even able to stay down and reverse the same day, it's a very strong sign that the market wants to reverse, okay? And so when I saw this reversal happening, I started to think about maybe the idea of taking the opposite side of the move, because I was like, if the market cannot keep going down on such a negative news, I don't really know what would make the market keep going down, if that makes sense, okay? And so then after that, right, I waited a bit, right? I did not want to rush into a position or anything like that, right? I think that one of my strengths as a trader is that I'm very patient, so I'm not looking to force anything. And so I was waiting, right? I was waiting to see. And so what was very interesting, and this is what happened on Friday of last week. And you guys will see, right, this is really what gave me the idea of going with the trade that I will explain you guys, is simply that we have what we call the Fed's terminal rate, okay? And so that means that this is the highest level of interest rate of what the Fed is looking at right now. And so before this recent data here on inflation, this is our trading group, by the way, with all of the members inside of our coaching program. So this is the trading chat that we have. I post a lot about market updates and stuff like that. And so this was essentially, right, the Fed's new dot plot. The last time that they showed us this chart, and where they essentially broke down what they were looking for in terms of interest rate. Now, I'm pretty sure that a lot of you guys are not really familiar with a chart like this. Now, what that essentially means, right? Forget about the green line, the purple line, and the white line. Let's just focus on the yellow dots right here, okay? And so essentially, right, what this shows us is that the yellow dots are all individual Fed voting members. And so what that means is that in 2023, the overall interest rate top, okay, is expected to be between 4.5 to 5%, around there, okay? And so what that really means is that this is what the Fed was looking at in terms of total hikes, right, all combined to get to this point in terms of interest rate. And so as I said, this was before the last inflation release, right? So the last numbers that we had. And so what the market initially was expecting, and that was the same thing for me, is that, well, inflation is high, so they will want to push interest rates even more than what we had here. And so because of that, I was still expecting USD strength and stock market weakness at the beginning. But then, as I said, the reversal happened, and I was already a lot less convinced by all of these moves, right? And so I was waiting, right? I was being patient and just trying to see, right, if there was something a bit more convincing than just this idea that I had in mind. And the convincing part of this idea actually happened last week on Friday, as I said. And so what happened, I have the article right here on Forex Live. So we have Timmy Rouse, I'm not sure if I pronounce it right, but whatever, right? And Dali, which is a Fed voting member, a message not to ignore, okay? So one dovish Fed surprise can be coincidence, two can't be. So what that really means, okay, I'm not going to read all of this with you guys, right? If you want, you can pause the video and take a look at it, right? And just read it on your own. But essentially, I'll just recap it for you guys, right? Very briefly. Timeras is a reporter that is very well known and looked at when it comes to the markets, and Dali is also a very important Fed voting member. And so both of them on Friday came out around the same time, and what they said is that even if the last inflation numbers were a lot stronger, they were not looking to push interest rates beyond 5%, which is already what we had before, okay? And so what that really means, and that is a very, very important message, and you guys really need to understand this, it's like the most important part here of the video, right? What that really means is that, as Adam right here wrote on Forex Live, one person could have been just a coincidence, but 2% at the same time saying the same thing is not a coincidence. It just cannot be, especially before the blackout period of the Fed, which means that this week we will not hear much from the Fed, because next week we will have the FOMC press conference where they will talk about interest rates and their monetary policy and stuff like that. And so what I think that this really was there on Friday is that Timeras and Dali both came out, said the same thing, right? That they would not push interest rates further above 5%, right? Despite these really strong inflation numbers. And the reason why they're not going to do this is simply because, as I said at the beginning of the video, and this is why I put you guys in context, that when there is such a big change in terms of monetary policy, it usually takes multiple months, even up to a year, for the economy to really take all of this and to really see the impact that it will have. And so what the market is, I mean, what the Fed is thinking right now is that they've been hiking for like 9 months, you know, approximately, right? Like this is the time period in 2 or 3 months that we will have for the total hiking cycle, right? And so what they are telling themselves is that they will wait and see what the impact of this will be on the economy before pushing even more. And so what this means is that now we have kind of a pretty good idea that most likely in 2 or 3 months, when the Fed will have done their hiking cycle and they will be between 4.5 to 5%, we know that most likely they will stop around there and they will probably pause for a couple of months and wait to see what happens, right? And so what that means is that this is a relief for the stock market, and it's a negative sign for the US dollar, okay? And so that's the reason why this week we're seeing the stock market go back down, go back up, sorry, right? And the dollar go back down and breaking lower, right? And just again to show you guys what I mean, right, when we talk about pricing in advance and stuff like that, really just to give you some historical perspective and stuff like that, right? So here on the chart, I have the dollar index, right? And I have in orange the US interest rates, right? And what I can explain you guys, right, I think it's really the simplest way to go about it, is that after COVID, right, we had very low interest rates and a lot of quantitative easing, so a lot of money printing, and because of that, the USD went down, right? Now, around these levels here, this is where it started to stabilize because, the Fed and the markets were not too sure where to look for when it comes to the next move. And so essentially, right, throughout this time, the Fed were saying that they were not even thinking of raising interest rates, right? So they were saying the word thinking 2 times. And so what happened is that right here, exactly on this day, okay, so this was the 16th of June 2021. I remember this day very clearly. We had a press conference from the Fed, and they said that they were starting to think of raising interest rates, right? So this was the first small change in the way that they were talking about interest rates. And then what happened is that the market, right, so the dollar started to go back up to price in the idea that eventually they would hike interest rate. And if we do the math, right, this was in June, and the first hike of interest rate was right here, as you guys can see, and this was essentially in March of 2022, right? So we went from June 2021 to which was the first time that we heard the Fed talk about eventually raising interest rates, and the dollar started to go up for months and months and months and months before that it actually happened, right? And so the thinking process is that we could very well be in a very similar situation right now, that even if interest rates will keep going up, as I said, for the next 2 or 3 months, that's a certainty, because right now the interest rates, right, it's at 3.25%, and they want to get it at 4.5 to 5%. So they will hike a bit more, right, for the next 2 or 3 months. But even if they do this, right, everyone knows about that, right? Everyone knows that they will have to hike, because they already said it like so many times that they will push it to these levels, right? So it's not a surprise, it's nothing new, and it's nothing that a professional will want to base his trading on right now. But if we know that in the next 2 or 3 months, the Fed will start to pause the hike in terms of interest rate, and they will start to just wait and see, then this is really a relief for the stock market, and it's a negative sign for the dollar. And as I said, the market will always move in advance, and that is the reason why we are seeing right now the beginning of what I think is most likely a bigger correction on the dollar, right? So I would not be surprised to see this go a bit more down in the next couple of days, weeks, and months. And I'm not necessarily expecting like a total reversal, because at the end of the day, right, interest rates will still be very high, and this will surely have an impact, right, on the economy. So I'm not expecting this, for example, right? But what I think would be possible is that we get something along those lines, right? So kind of a bigger correction, maybe eventually coming back on this 200 moving average, right? And so the trade that I took this week is exactly this one. So I took the trade on Euro USD. Okay, so as you guys can see, we were in a very strong downtrend for a long time, simply because the situation was still going on, that they were increasing interest rates and pricing in this idea, right? But now that we are starting to price in the opposite, that they will take a pause, right? Well, we are getting a reversal, and this week, at the beginning of the week, around these levels here, when the market started to break above this down trend line and this 50 moving average, this is where I got in the trade. So as you guys can see, I literally took the trade yesterday, but so far the trade is running pretty nicely. It's already in a pretty good profit. And as I said, I'm not necessarily looking for a move like this, right? But what I think is possible is that we get something along those lines, right? So just a pullback essentially. And yeah, that's the idea, and that is what I'm looking at on the markets right now. So I really do think that at some point, as they said themselves, right, they will have to stop raising interest rates. They will have to take a pause. I think that last week, right on Friday, they literally just were very clear about it, right? And I think that this is a very strong sign, and that's the reason why the market is moving so much right now when it comes to this. And I think that it will be the main narrative that I'm going to look at myself for the next couple of months. So yeah, that's about it. That's the idea. So I think that it's pretty clear now that I'm expecting some correction on the dollar. The stock market already went up nicely, but if it wants, we could get to this level here, I think, right? So 3,900, we could get to this one eventually as well, right? So all of these obstacles right here, and who knows, maybe even more, right? So now it doesn't mean that it's going to go again in one straight line, right? Like we could do this and do this, right? And do this, and just kind of make some up and down along the way. It's perfectly normal, and there's nothing wrong with this. But overall, I think that the probabilities for more upside are very much there. So yeah, that's what I'm looking at on the market. As you guys can see, I'm already positioned in this idea. If I get other opportunities, I would position myself even more. So we'll have to wait and see for this. But yeah, that's the breakdown. So I hope you guys enjoyed the video. I hope I was able to make everything clear, because there was a lot of information, and I really wanted to make sure that you guys understood the historical perspective and what we have within the present moment. I think that both of them are just as equally important. If you guys enjoyed the video, please leave it a like. Again, I would really appreciate it. And on that, take care, trade with care, manage money well, and I will see you in my next video. Bye bye.